Okay, and welcome. Today is 2:44 p.m., 10 October, Tuesday. And please read the disclosure. There is a risk in the trading, and please try to read it carefully and see if trading suitable or not for you. There is a risk in the trading, and it is very important to read the disclosure. Today, I want to cover a little bit connection, of course, Arithmetic Ninja Trader Broker, and pretty much smooth out, but that's not what I want to cover today. If we notice on the CL, because we've been doing this for many years, using the same time frame every day on 150 ticks and 1 minute. We do not use rank bar one day or line break another day or range, or we use the same time frame on all market with no exception. And this is what we have been doing for many years, because other than that, it's a sign of weakness. If we want to show you CL today on 1 minute and tomorrow on a range bar and the third day on a rank bar, this is not the way to do it. We do it all the time on the same time frame, all market, and that can give a pretty good idea what's going on. So the only thing I would like to highlight today is the CL. And again, we're still struggling in the CL for many days. If we look at the 150 ticks B scalper CL, struggling. If we are looking at the CL, the B scalper 1 minute, it was okay. And the A scalper 150 ticks, flat. And then the A scalper 1 minute is flat. So is there something wrong with the auto trade? No, there is nothing wrong with the auto trade, but the CL lately has been a little bit struggling on those time frame, and we have to show those. For many years we have been using the 1 minute and 150 ticks, and we're gonna insist on continuing doing this 1 minute on all market and 150 ticks on all market. But this is not what I would like to cover today. On the update on the scalper, we have done also, you can do swing trading. So you have an option to scalp the market or swing trade the market. What I want to cover today, on the swing trading, there is no optimization for trailing stop, and there is no optimization for stop loss. And the reason I hate those, no matter how much you optimize, and actually today we were covering that in the room, that it cannot be every day, every trade, the same stop loss and the same dummy trailing stop. As an example, we have this 600 ticks chart, and if we got into this signal here, when the signal fired at 49.87, and if we noticed by the time this market pulled back here, most likely your trailing dummy trailing stop, it would have exit you out of that trade, and then you get out of that trade, the middle of the trade, and that is not really pleasant, because it could be, if you are using some kind of high filter, probably your next entry is going to be here and the market is over with that trend. So what I like to show on this update, what we have done 3 months ago on the swing trading with an option scalping or swing trading, what we did, the system itself, you can enter the market with an option, a limited market or a market price, highs or low, if you want to, but the exit is a market order. So again, the entry is an optional to the trader. This one here, I'm using market order, but you can use market order, or you can use a limited order, depends what kind of trader you are, but the exit is a market order. The reason we have done that, and that is, you're not going to find it anywhere. The 600 ticks, this is a really serious time frame, the 600 and the 750. It is a very serious high time frame. And when we are using the high time frame, we are cutting all those noises from the 1 minute As an example, on the 1 minute, you can see the market goes up and down all the time, where when you are using a higher time frame, you are cleaning all those noises in the market, and the market is giving you one direction in a way. So what we have done with that, we let the auto trade decide once the trend is over, the trend is over. And if we are looking at the 600 ticks, this is a serious, you might think in any auto trade on a 600 ticks, you cannot auto trade less than 22 ticks, 23 ticks, 25 ticks. And this is heavy. I want to show you how the system here exit. We got in on the first trade, and we started at 49.87, and we exit at 50.20. But I would like to show you the second trade is an automatic, does not require any optimization. The whole idea about this kind, the trade we did on this update, that if your trade did not go through your direction immediately, and there is change in the trend, your auto trade is going to exit, and there is no certain ticks, and it's not based on a dummy ATR. Which, what is an ATR? Is a moving average, above or below. This is it. That's all what the ATR is all about. So it's not based on an ATR, a dummy moving average. And if we are looking here, we got in on the trade at 50.20, and then we exit on that trade at 50.16. So that's mean we used only 4 ticks for stop loss here, and that it is impossible for a guy trading manually to aim it at 4 ticks. Then the whole idea that a lot of traders, they dismiss it, that absolutely sometimes you get in the market and you take 1 trade, 2 trade, 3 trade, and it's not going your direction. For some reason the market is not going, or there is a lot of volatility, or this market is not willing to give anything today. And the whole idea, the whole principle about trading, which the most advanced traders, that's what they know better than that, that on the stop loss you should not use a lot of ticks. You have to be very stingy with it, and when the market go in your direction, then we are going to grab. So this is the whole idea here about the swing trading, which on 600 ticks we give away 4 or 5 ticks on the first losing trade. But when the market is going to our direction, we are open up, and we're not getting out of that trade until the market is over. And if we notice here, once we exit from that market, it was nothing but down the hill. So here now, because we can see what happened the rest of the day, but if we take that trade here, and we can see that auto trade took it right, because it seems like, if you notice where is your high and your high low, it is a very, and if you have using your fib line, this is a very genuine trade actually here, and anybody can take that trade, whether you are a manual trader or an automated trader. But then the market turned around, and then we can see we lost those 5 ticks, which is very affordable, especially on chop market, that it is very important to keep surviving, because most of the time the CLES, any given market, is gonna swing, is gonna spike. We don't know when it's going to do. 5 minutes before the market's open, before lunch, after lunch, or half an hour before the market close. We have no idea when this market is going to spike, but we know it spikes 1 time a day. So what happened on the second trade, we can see there is a change of the direction, which is very good, and nobody can aim it like this if you are a manual trader. And then we have entered the market at 50.29, and this is 600 charts, 600 ticks, folks. And then when the market did not go our direction, the auto trade dumped it at 23 market price. So between 29 and 23, how many ticks? 6 ticks. Then we tried one more time. We got in at 20, 50, 20, and we got off at 15, 16, 50, 16. Also, this is just 5, 6 ticks. But then when the market start taking direction, we're trying to follow, but when the market change direction, we exit. This is the same story on the 5 range, which is a very serious chart on the 5 range. We can see the 49.85 was an entry, and then we got off around 50, 60, 16, and then we got in at 50, 20. We got out of that trade at 50, 26. So the market, the entry, this one here is a market order, and the exit is a market order, where also you have an option with a limited order, but the exit is always market order. Once the auto trade decide to dump that trade, we're going to be dumping it. And then here 20, and then I think it was 20, 50, 16 on that trade. Let me see. No, this one here entered at 50, 20, and the exit it was 50, 10. So this is around 10 ticks on that trade. Then we took that trade here from 50, 52 all the way to 50, 80. And this is where you need to close for today, because you got lucky with 2 nice spikes in the market here. And that it is very serious. The second trade was 30 ticks, and the first trade was I cannot read the number here, but this is around 30 ticks as well, or 28 ticks. So this is really, really nice. And now we got in at that number 50.84, and then we exit at 88. So on that auto trade, there is no optimization, and there is no dummy trailing stop, because I'm trying to get the traders out of those dummy trailing stop. And most of the time, even when they are trading manually, I don't understand why they're trying to use a dummy trailing stop, because the first pullback on any given market is going to knock you out of that trade. And I don't get it. When the market is going to your direction, why you are in a hurry to get out of it. And then when the market, which most of the traders do that, most of the amateur traders, when the market goes on a different against them, then they try to give more in the stop loss, which is the other way around. When the market is going against you, dump it at any price. Don't try to save a losing trade. Of course, there is another alternative you can do, but if you're not if you're not been around and you are trading one contract, and you see this market is going the opposite direction of your trade, then you need to dump it as soon as possible and try to get in somewhere else. So the whole idea about this auto trade is, when the market is going our direction, we're gonna grab it. And when the market, for some reason today, the market like the CL is not doing well, a little bit clumsy, sideways, all kind of reason, then our losses is limited, and that will keep us survive until we catch that spike for today. And once we get the spike for today, we are done. As an example today, I want to show you something happened in the room today on the ES. And this is also 600 ticks, and this is a very serious chart. We started with this one here at 45. We exit at 47. It went south the first trade. Then the first trade was at 46.50. We got out at 52 even on that trade. Then in the room, when we had the 49.75. I didn't think it's gonna make it, and made around $475 on that. This is a message for the guys, mainly those the ones they make a lot of noises with a $3,000 account, and I want to trade 24/7. I want to show it to you that running the auto trade all day long does not mean healthy. Running the auto trade all day long, it could turn the magic against you, because today on those 3 trades, 1 losing trade, 2 winning trades, we were up to 949, and the target was 1,000. And the market was generous enough to give us 2 spikes in the market on the way up and on the way down. Normally is 1. We left it in the room, and then we took the second spike. But for a guy, it is conservative. Once you get the first spike, you should be closing your computer or try to do some training or trying to learn how this market learning. But you should turn off your live account. Anyway, to cut the story short, we have a losing trade. We have 2 nice winning trade, and we hit $945 on those trades. And then the market went sideways. As you see, the ES, what happened on the ES, and nobody knows. You can claim anything you want in this market. You can use any instruments you want. We have those. It is a flat. The market got stuck in those channels. Once those market gets stuck in the channel, there is nothing. So when the market it was trending, it was very nice. But when the market got stuck in the channel, you're not gonna get anything but losing trade. So then 1, 2, and then this one barely made it. So what I'm trying to say is, especially, look, we had a 2 lousy trade, and this one barely got in at 46.25 and got out at 44.50. So if we were happy with those 2 spike we had here in the market, we walked away with 945. And if we stayed in the market, now you are down to 600, 700. So being in the market, exposing your live account is not really a brilliant idea. Let's look at the NTA system. This is a totally different type of a trading. This kind of trade, you can use ATM swing trading, or you can use fully automated trade with an option. On this one here, we have the signals. Is based on the signal. You don't have to do anything to the chart. Entry price, target price, and look, and depends on the market's movement. So if we, and then you have the P&L, and then the target hit or the target didn't hit, and then the trailing stops are based on the FIBs, moving FIBs. So as an example, what we see right now here on the ES 1 minute chart, we have the entry right here, right under the yellow at 46.50. Usually that system is much, you can catch those movement from the morning until 12 o'clock, and then in the afternoon you can sit down and wait on a very nice entry. But this kind of trade, you will be much better for you if you trade it, because you have a lot of movement between 8, 9 o'clock to 12 o'clock. And today, right now, the market is just 3 o'clock now, 3 or 4, the market is finished for today. There is not much going on, because this is a type of swing trading. The swing trading telling us now at 46.50, target at 49.25. Your trailing stop, again, I don't like to use a dummy trailing stop. The trailing stops is based on flooring fibs. And the same story right now on the NASDAQ, and the same story on the YM. And you can use it for Forex stocks, and you can use it for future trading. And this one here, if we notice on the NASDAQ, we have a lot of resistance on the way. And if we look at the Nasdaq entry, is right under the trailing stop right now, which is around 56.25, is right under this one here, 56.25. This is your first support line, which is a trailing stop, is 59.25. And now the major support line is at the same number as your entry, and we can see is blinking that there is buying. And this is something very important also when we are trying to break some resistance level, heavy resistance level like here. Is very it is really, you get comfortable when you see this thing's blinking and it's telling you there is buyers coming, and you are measuring the buyers over the sellers on a 3 different time frame, where immediately you spot the buyers over the sellers. That will keep you on the trend. And then we have a major resistance line, which I don't think so. This market, it will be a break in the 66.25, and despite the buyers here and the target at 72.50, those are your zone. And if you notice, where is this line right now? There is a buy-in. That means we are gonna break that line. Look at this. I'll stay a few more minutes. There we go. I love to reverse the market. I like to trend the market based on a pullback re-entry once the market is confirmed, but also the money is in the reversal. If you've been around, there is much more enjoyment in the reversal when everybody trying to go long, you go short, but you have to, in the reversal, if you're not experienced enough, can bite you on that. So actually the money is in the reversal, and look, folks, at 60, look at this. Those are your $35 zone. Look at this. We missed that trade by 1 tick. Okay, folks, that's what we have. And I want to say, please be careful with your trading. God bless you all, and see you another day. Bye for now.